Right. Good morning, everyone. Good morning, good morning, good morning. Welcome to today's morning market review. Just to quickly check in if audio is good. Right. So you can all just type good morning in the chat box that know that my audio is good. Mr. Michael. Morning. Chi. Right. So good morning, everyone. Audio is good. Yeah. And also, can you see my screen? Right. If you can see my screen, just give me a thumbs up or more from Jos. Wow. I know we've been to Jos for training, but that's like I think a year ago. Right. Good morning from Jos. Good morning, all. Good morning. All right. Um, my name is Gabriel Orita, and taking this morning market review this morning. And greetings from Abuja office to everyone. So, just a very quick one. Denuga. Good morning, sir. Mr. Mike. It's like I have more Abuja people. All right, so something happened yesterday, and good morning from PH. Morning, good morning, good morning, good morning, good morning. All right, let me quickly share something with us. Something happened yesterday, and this is to make us understand that the market sometimes can just misbehave. Yesterday was CPI, which I believe everybody is well aware of. And data came out. I think it's better we just see this so that I don't talk out of context. IMF traded the CPI news yesterday. I think I'll need to have some numbers. The Kelly CPI misbehaved, so disappointing. But not just only you, also disappointed me. Okay, who else traded the CPI? The Adenuga. So how did it go? Did you make profit or what happened? Because the data yesterday didn't really move as we expected. I my CPI yesterday, though, oh, Mr. Armstrong, you had a loss. Oh. Then Mr. Felix, you made 12K. That's good. That's good. That's good. I think you need to share that secret with us. Yeah, the secret of 12K. Okay. All right. Now, I believe everyone had most of us, apart from few of us online currently, most of us have a bad CPI, and for the fact that the data didn't really move the market as it was expected to. So CPI is believed to be a major fundamental that can easily, make price to spike in any direction, right? So, but let me quickly share something with us this morning, and just understand that for over a while, if we are to check the CPI data that has been released over time, that was yesterday, Wednesday. Okay, so this was the data, as you can see on my screen, CPI, and yesterday. So we have two coming out the same in as much as it was higher than the previous. Because in fundamental analysis, you have the previous data, you have the forecasted data, and by the time the date and time for that news has come for it to be released, then you will have the actual data. So So now, two came out with the forecasted data showing that, yeah, inflation is in the US economy, right? While the year over year came out to be 2.9, showing a bit of a drop. Now, but looking at this data, even with the expectation and with the sentiment behind it, I think basically that's why we didn't really experience a major move. Yeah, and the sentiment still lies on the fact that in September, it is expected of the Federal Reserve of the US economy, it is expected for them to cut the interest rates because of inflation. Now, these are sentiments, these are news, these are, we used to call them noises that is surrounding the market. So because of the sentiment behind the market, majorly, even the major fundamentals that we are expecting might not really move the market until the US economy, either there is a rate cut or there is an increase in their interest rate. So now, until we see the data of the interest rate in September, before we can now determine how CPI and other news events will be reacting to the market sentiment. So basically what happened was that price did not move as expected. So it's not your fault you had a loss, and it's not your fault that price did not move as it is being expected, right? So it's just part of market doings. So there are days the market will go, and there are days market, market will not move. So you just need to give room for those days. You need to give room for those days. Even me yesterday, I have some trades that peaked. Okay. I have some trades that peaked, but eventually I think I just had to close some. In short, it was even my stop loss that hit out some because I don't normally set stop loss, and okay, you can see, so just I had a negative of 159, 159,000 based on the data I was expected to trade. And if you check, the lot size were just small lot size, small lot size. So now, if I had used maybe like a standard lot, then it would have been the end of that account. So this is to tell us that you need to be prepared for when market will not move in your direction, and you need to be prepared for when it will move in your direction. So will you know the day it will not move? Certainly, you don't know, right? Don't deceive yourself. There is no way you will know when the market will not go in your direction. Okay. All right. So I think answered CPI this morning. So let's quickly go to our analysis schedule this morning. I think yesterday I was trying to show some of our clients in the class about the movement of price and also how to anticipate, how to forecast what price we do over time. Now, basically, I think I should just start with USD JPY. Yeah, I'm starting with USD JPY this morning. Starting with USD JPY. Now, basically, I like doing my analysis on a higher time frame, then I bring it down. It is what is called top-down analysis. So start from the highest time frame, bring it down to your preferable time frame, and gives you an edge over the market. So basically, I know that USD JPY eventually is still more of uptrend, right? So the trend is up. Now, expectation is do more of buying in an uptrend rather than selling. Do more of buying in an uptrend rather than selling, right? So I have just one indicator on my chart, which is moving average, and you can see the blue and the red. The red is the 21 moving average, and the blue is my 50 moving average. Okay. Price has done what is called a false breakout in as much as the candle is still forming. The candle here You see, the candle is still forming. So since the candle is still forming, now I can't conclude that this is a false breakout. Okay, it is until after this month, and this month we still have, I think, 16 days, 15 days to go. So since we still have 15 days, which is like over 2 weeks to go, then I need to be very careful with my activities on USD JPY. Now, going to weekly time frame, we want to check also. Remember, on monthly time frame, price is sitting on the moving average, but on weekly time frame, price is below the moving average. Now, moving average is a dynamic support and resistance that can help you to know at what point price is ready to change direction or price is ready to move to continue in its direction. So basically, it helps me to identify series of trend in the market. So if price is uptrend, majorly I see the candlestick above the moving average. If price is downtrend, I see the candlesticks below the moving average. So now on weekly time frame, you see price has fallen. And I need to open your eyes to some things here. If you notice, anytime price fall, this is a fall here. Anytime price falls, this is one move now. Anytime price falls, eventually, no matter how bad, price will always find its way up. I'm doing this on weekly time frame, then I'll still go back to daily time frame, then down to 4 hours, 1 hour, right? So it fell, but what happened? Price find its way up a bit, retraced, pulled up, retraced, and eventually it got back to the highest point it created, right? Now, in coming back to the highest point it created, price fell again, which caused a retracement, went back to the same high that it got to previously, just a bit, and price broke the previous high, right? Now, another thing. When it got to the previous high here, what happens? Price fell. So I will need to put a line here. This is the highest point. See, almost exactly, at the same point here where it got to, exactly at the same point, and it fell. Now, after falling, what did price went up? Got to the resistance again, ranged a bit, and after that, price pulled up, tried coming down. Basically, where am I heading to? This is real-time analysis now. Price has fallen now, right? And it's looking like price wants to start, because you see this candle you are seeing here, this is rejection. Yeah, especially when you see a very long shadow like this. This is what I called massive rejection. Now, this is weekly time frame, so this shows that the rejection was massive, right? So now at every point, because previously this is what happened on USD JPY, right? Yeah, we'll still get to all those instruments, right? Let's just take it one step at a time, one step at a time, all right? So now, looking at what USD JPY did, or what it has been doing, basically, falls, rise. Now, it has fallen. What is your expectation? For those that are trading USD JPY, my expectation is that USD JPY should find its way back up. Simple as that. But now, the question you want to ask me is, when will it start going up? Sir, with this rejection, if this candle by tomorrow, if you are on the morning market review and you want to make money, you need to hear this. You need to hear this, right? If by tomorrow you see this candle forming, don't be surprised that this candle might finish as either a bullish candle or a sell candle. I'll give you the two scenarios. Two scenarios. If it finished as a bearish candle, I believe everybody knows what a bearish candle is. Bearish candle is a sell candle. Right? So if it eventually finishes as a sell candle, now because of the candlestick pattern, there is tendency I'm still expecting another fall. Let me come back again so that you understand. Now, if this candle that is forming, which is this guy here, this candle that is forming, let me show you this one here, this particular candle. If this candle that is forming ended up as a bearish candle, if it ended up as a bearish candle, expect price to still fall for one more week. That's if it's finished forming as a sell candle. Now, but if not, which the second scenario, if it finished forming as a bullish candle, then I can say that price is ready to go up. Why? This rejection I'm seeing here represent the presence of buyers in the market. And showing the presence of buyers in the market, now I have a confirmation because that's if it finished as a bullish candle. So I have a confirmation that, oh, truly buyers are ready to take over the market. All right. But without a confirmation, there is no way I would want to just jump into a buy trade. Now I'm doing this to do a long-term trade, right? A long-term trade. You just enter the trade, leave it, but ensure that you have good money in your account, because there are some trades that requires good volume. So if you are talking about volume, talking about capital that is expected to be in your account, right? So somebody that wants to do a long-term trade, you have 50,000, you have 30,000. You are just doing scalping the 15 minute time, that you are doing that work for you very well. But have less 200,000, I think it's better you are doing scalping, better you are doing pending orders, or you get signals that can help you. But for those that have good money, nothing less than 500,000 and above, and you really, really want to make profit, right? All you need to do is to spot where price is about to change direction. So I'm helping you with some, some directions of some instrument this morning, which is a long-term projection. Now, somebody will say, but since I'm doing a long-term projection, can't fundamental change the direction of price? Yeah, so that's why you need to give room for it. There's tendency, there is possibility that that fundamental can change the direction of price, which means I'm expecting price to go up, right? And there is a major fundamental that happened either for the Japanese yen or for the US dollar. Then obviously I'm expecting the direction to change because fundamental events can override technical analysis. There's no two ways about it. Fundamental event can override. It can disrupt your technical analysis. It can scatter your technical analysis, right? Look at what happened yesterday, right? Nothing, no fundamental movement. Everything was just up and down. There was no major move. In as much as gold fell, I'm still going to gold, but so we didn't see any really, really major impact. There are times it happens like that. But imagine that the news came out very good or very bad. It would have, created a new stream of technical events that you will now need to put in your support and resistance, check history of price. All right, so all those things. But for those doing long-term trade, if this candle finished as a bullish candle, if it a good, not like this, please. If it finished forming like this, please just stay off the market, stay away from the market. But if it finished as a good bullish candle, what do I mean by a good bullish candle? Now, good bullish candle, you have a full body candle, a full body candle, a full body candle that you can see the body. It's like somebody that went to gym and all the muscles are showing up. A full body candle is what you're after, right? So in seeing a full body candle, then I'm good for a buy. Enter your buy. I'm already in a buy, but on a different account. So now you enter your buy. Now, where will you now be looking out to take profits? Now, you need to understand something with USDJPY. It breaks resistance and it creates a new level of resistance. So, which is what you need to be looking out for. So, if you pick your buy, let's say somewhere around there or somewhere around here, now in taking profit, you can decide to be looking out for, let me check the peak movement. You'll be looking out for 500 pips. Yes, be looking out for 500 pips or above pips for USDJPY, 500 pips or 600 pips. Take profit targets now. Take profit. So in the case of eventuality, you need to find, for those that want to set stop loss, right? But me, because of what happened yesterday, that's why I had to set a stop loss. But for a long-term trade, I don't need to stop loss actually, because my entry point, determines how long I'm to stay in the trade for a while in a loss, and then eventually comes back to profit for me. Now, I'm going to be showing us how to, enjoy trading, a long-term trade, which is you want to be a position trader or you want to be a swing trader, any of the two, going to give you a strategy. All right. Now, finishing with weekly time frame, I'm going back to daily time frame. Remember, on weekly time frame, our candles are below the moving average. On daily time frame, also, what happens? They are below the moving average. And I need you to understand something. Anytime price has fallen, it is expected that there should be a retracement, some levels of retracement. So with all the fall that has happened to price on daily time frame, this is looking like a retracement for price. Now, I think I'm seeing a candle formation here. All right. Now, I believe some of us have attended candlestick formation very well. So I think I will need us to, in the chat box, can you see what I am seeing, or you don't understand what I'm seeing? So let me quickly get our response now. So on the daily time frame, remember our price has fallen, right? So, and after it has fallen, there's something here, all right? Okay, Emmanuel Mills, what can you see? What can you see? More, Modesta Odo. You don't understand. Okay. Victor Ayodele, a reversal pattern. Okay, good. Okay, Jima, don't understand. Adenuga, rejection, right? Okay, everybody is correct. Everybody's correct. Now, but let me quickly say something, right? Quickly say something here. By the time you understand how price moves, by the time you all right. So by the time you understand how price moves, now you easily get to understand where to be buying and where not to be buying. You understand where to be selling and where not to be selling. Now look at this. Price fell completely. As it was trying to fall, there were some patterns that were emerging, but there was no confirmation to those patterns. Now, until price got to this point here. Now, at first, this was a full-bodied sell candle. And eventually there was rejection, just like I think somebody mentioned rejection. That's Adenuga. Now, okay, Izuchukwu March. The period I'm using is 21 and 50. 21 and 50. Right. Now, I would have decided to add 100 and 200 because those ones are for long-term events. But then now with 21 and 50, if you check the chart very well, especially on this daily time frame, price respects more of 50. Respects more of 50. So now this is another thing you need to understand. Is EMA, exponential moving average. 21 and 50 EMA. I think there will be a time I'm going to differentiate between the SMA and EMA so that you understand the one you are using per time. right? The two of them have different functions, but in as much as they still serve us as support and resistance of price, they have different applications, right? So now there was a rejection, just like Adenuga mentioned, right? And after the rejection, what do you have? See, I have what is called an inverted hammer, right? And I have a confirmation candle. But the first thing I need to check is price at a support level, which I will now need to zoom out of the chart. Is price at the support level. So if I'm to identify support, if I'm to identify resistance, okay, let me change this to red so that it serves as resistance. Okay. Right. Then okay, I'll change this to green. Okay. Then now you see these two. I'll change this to actual. Now, why aqua? No, the last time I did morning market review, this the last time I did morning market review, there's something I shared with us, and I believe we can still remember, or some of us might not be able to remember. Right? Now, basically, price moves systematically. What do I mean by that? Every instrument on the platform has a price target. Now, every instrument has a price where they are expected to get to before there can be a reversal or a retracement. You need to listen to this very well. It works on any instrument. It works on any, it's a secret though. That's why I'm not shouting. Can you see? It's a secret. Now, every instrument on the chart has what I called a price target. Now, what do I mean by price target? The price target is that every instrument, be it currency, be it commodities, be it stocks or indices, in short, be it crypto, every instrument has every instrument has where they are expected to get to, regardless of any event or any support or regardless of anything, it is expected that price should get to a level. Now, but our own assignment, because it is not something that you can just easily see. Our own assignment is that we will need to now locate where the expectation of the price movement of that instrument is. If we can do that, then we are good. So that's why I said it is an assignment. So that's a secret, right? Now that's why I've resorted to this point whereby first I will need to be locating one, the highest point that price gets to. So the highest point that price gets to on any chart, I'll look for the highest point. Also, the lowest point I can see on my chart. Currently on my chart, this is the lowest point. If I zoom out on my chart, this is the lowest point here. Look at it here. Are we? Now, but let me be seeing my candlestick formation. Let me be seeing it. It's better I'm seeing it. Now, in seeing it, right, this is my lowest point. This is my highest point. If I divide it into two, something like this is what I'm having. Something around here. You see this red line, right? Dividing it into two. And if you check it very well, just check very well, this middle line is serving as either a resistance or a support for price. Before, it was a resistance, right? Resistance, support, support, but price broke it. Now, what do you think it will be serving as? It will be serving as a resistance for price, basically. Now, where are they expecting USD JPY price to get to? That's the question. Because if I can be able to break that code, ah, oh, now this is still a theory I'm working on, right? Because I need to be able to understand the dynamics, the way price moves, and also the expectation of market. What is market trying to do? Because most times you close out a trade in negative, you close out a trade in loss because you don't know the expectation of the market. If you know the expectation of the market, you should not be closing the trade in loss. Rather, you should be looking out to follow the expectation of market. Now, now, we believe that this guy is uptrend, right? But then, in dividing my highest and the lowest point, I have 151.788. 151.788. Obviously, this is where I'm expecting price to get to. And guess what? As price is trying to come back to the resistance, this 50 moving average also will be coming down. Yes, the two of them will meet somewhere around there. See, you can screenshot this chart and save it for the future. Yes, you can screenshot it and save it for the future. Screenshot it, save it for the future. Yes. Let me change this. Let me change this to tomato. I mentioned tomato, right? This one, this tomato. Yes. You can see my resistance now, right? It was resistance before, turned to support, but it has been broken now because price did not even respect it at all. And after that, what happens? Price fell, located another level of support. Now it's trying to bounce back. So if it's bouncing back, I'm expecting price to look for the resistance or the support it broke, look for it, retest it, then let's expect some levels of movement, right? So the best thing I can do is to, if I'm not entering an instant buy, I can put a pending order above this high, pending order above it, and I can be looking out to take profit before the next resistance. Let me shock you. This is more than 1,000 pips. Yes, that's more than 1,000 pips. Or getting close to 1,000 pips. Okay. Now, you see, put a pending order above. That's a buy pending order because you are sure, anytime price is moving, the moving average is also moving with price, but not at the same pace. Do you understand? Not at the same pace. They move at different levels, but moving average is still a representation of the movement of price. So this is telling me that currently price is struggling around here because this place, something has happened in the past that price struggled around here. Now, the same thing is happening currently. So the best thing I can do, since I don't want to enter instant buy, I'll put a pending order above this previous high, then I'll be looking out to take profit before the next resistance. Because if you check, if price is going back to a previous support or resistance, to some extent, it will respect it. So since it is respecting it, then what am I expected to do? I'm expected to also respect the expectation of the market. So respect the expectation of the market. Now, see, this market, if you don't respect this market, the market will disrespect you. Yes, true. All right. So now, if you are doing your buy stop and your buy stop above, then with your take profit, then you'll be good. Now, let's come down to 4 hours. What can we see on 4 hours? What can we see on 4 hours? Because remember, we started from monthly time frame, and after monthly time frame, where did we go to? We went down to weekly time frame. You can see on weekly time frame what is going on, right? And after weekly time frame down to D1, which, now what you are doing is that you are making the chart more clearer to you. You are making it more clearer to you by doing a top-down analysis. You see that from daily time frame now, I've been able to craft out an entry and a take profit for myself. Can you see? An entry and a take profit, right? Now, coming down to 4 hours time frame, to prove my point further. So looking at this, this is a resistance for price, and price has been doing more of up and down, right? So if I am to do something like this now, hold on. I'm to do something like this. And then try to do something like this. So obviously, it's looking like price is walking into a range here. Let me change the color of this to red, so that I don't jump back the chart. Good. So can you see what price is trying to do, right? Can you see what price is trying to do? Now, since price is trying to move in a pattern, there's no problem. My own assignment is lay out a pattern and find the breaking point. There must always be a breaking point for every pattern. So that is my duty currently. So the breaking point of USJPY, because you can see that it's trying to, gradually is ascending up, gradually, gradually. Now, by the time, okay, sorry, by the time the move, which is the up and down, the range is trying to do is over, eventually it will break. And after that, what happens? I'm expecting it to break up. So I'm proving this point further technically, and you see doing up, right, and down, and after that. So that's my take on USDJPY. Okay, because of time. Now let me quickly check gold. Gold. I know there are so many people that love trading gold in this market. So because of time, let's quickly check gold. Gold. Right. So this is gold. Gold showed me a bit of pepper yesterday. Right? It will still check all these instruments. I think the last instrument I'll do is going to be oil, because the tension in the Middle East still looking like it's going to escalate. All right. Shinedu, okay, me too. Me too, me too, me too. All right. Now, gold. The last time I did money market review, I told us the expectation, which is price expectation for gold, is $3,000. $3,000, right? Now, if price is around 2.5, because that's looking like the highest point, price has gotten to, okay, 248. Let me be sure. Let me be sure. The price currently is around 2485 or 2482, but just take it somewhere around 248. Expectations for this guy. What am I expecting for gold? Basically, we have seen that gold also is more of what? An uptrend. Gold is more of an uptrend. And looking at what has happened previously, gold created a new high, respected it, got back there, respected it, got back there, respected it, and eventually price broke through the resistance, and in breaking through, I still remember this candle because there were so many, tension for sell, so many trade for sell rather, that was piling up somewhere around there, and good breakthrough. And since then, it has not come back to test the region it broke. So are we expecting it to come back to test it? There's every possibility it might not come back to test it. Every possibility. But then there is nothing that is impossible in the market. So you need to be careful with the market. Remember I said you need to respect the market. If you don't respect the market will disrespect you, all right? So now this is the highest point for gold. Let me zoom in a bit. Highest point and lowest point for gold here. Right, so I need to look for my midpoint. I need to look for my, let me still do the highest point again. Highest point, lowest point. Now, my midpoint, somewhere around here. No, it's accurate. Midpoint is somewhere around here. I would have just gone through the stress of, trying to divide so that I have an accurate price level, but it's going to actually take my time. So, and I don't want that to take our time this morning. So divide this also into two. Now, in dividing this into two, if you check, it's accurately reading a resistance point here, right? Okay. Now, I need to now divide this into two. Good. Got this. Now, what I'm trying to do here is trying to segment and also trying to check what are expectations for the movement of the price of gold. Okay, expectation for the movement of the price of gold. Remember, every instrument has a price target. Don't forget that. Don't forget that. Now, for gold, obviously, obviously, this was a resistance. Was. And right now, it is serving as a support on monthly time frame. Let me break it down to weekly time frame now. So on weekly time frame, now the segment will now become more clearer to me. All the parts I just divided, right? So it becomes more clearer to me. Now, with what is happening currently to price, remember this, I divided this into two, right? And price is looking like a support for price. Is also a support. I need to start some things here. I need to change this, something that will look like support. Okay. Yeah. Okay, so currently I'm on weekly time frame. Currently I'm on weekly time frame. So I just need to make this now. Currently, gold has gone back up above 21 moving average, as you can see on the screen. And right now, gold is looking like it wants to try and go above the highest point. The highest point. But I need to find on D1. So look at D1. Now, where was the moving average? The moving average below the candlestick, on weekly time frame, also below the candlestick, but on daily time frame, okay, the candle is above the moving average. Good. Now, on daily time frame, checking what price has been doing. Now, remember, we are just looking at for eventuality of price. Eventuality of price. Now, with all the things that has been happening, with everything that has been happening, so gold created, a new level of resistance, which is around 2485, right? Let me get that again. 2484, right? 2484. Now, in creating the 2484, this is what happened to gold, right? Now, gold is struggling around that resistance. And if you check what gold is doing on this daily time frame, this a low, but this low is higher than this. This high is lower than this. This high is almost at the same point. it will still come back. So if gold is coming back down, right, where am I expecting it to get to? Basically, just like what we did on USDJPY, right? So obviously, it's looking like almost the same trend that is going to be happening to them all. Almost the same, almost the same. Now, for trend line, you need to be able to connect 2 or 3 lows together. So 2 or 3 lows together. Now, if gold is still going to fall, then I'm expecting the price of gold somewhere around here. That means I need to divide this into 2, right? So if horizontally speaking, right, somewhere around there, but if it is diagonally speaking, then I'm looking at somewhere around this moving average, which will be at 2418. So 2418. See, eventually gold is a buy. Gold is a buy eventually, because the expectation of gold, of the price of gold, is 3,000 price level. Currently is at 2004, 8, 2004, 5. So I need to be able to follow through what the expectation of the market will be. So I can't just enter a buy, right? Before you buy, wait for price to fall. And after it has fallen, you can now look out for opportunities at your support or resistance or at those segmented points. Those areas you segment. Now, if price eventually fall down to this support here, I don't need to think twice. I'll be looking out for a reversal pattern so that I can follow the price back up. But if not, if it falls down all the way to the previous resistance, which is serving now as a support, then what I want to do also is to look out for a bullish reversal signal. A bullish reversal signal. And in talking about bullish reversal signal, it should be at the support, not at the resistance, right? So what are my expectations for gold basically is that uh, if gold will pull above this resistance it has created, let there be a bit of a fall. And after it has fallen, I'm expecting price to rise. Now, what's 4 hours telling me? Because we need to break it down. All right, you see, okay, I would have divided it on D1. Okay, midpoint, black. Now, I need to actually use different colors so that I don't confuse myself. Okay, this is black here that I'm seeing. You see, so even if price would want to fall, right? Now, if it's not falling towards 2378, let this fall towards, so in segmenting this, then I'll be having 2427, 2427. And after that, I expect price to find its way back to the resistance, because anytime it falls, it always finds its way back to the resistance. Anytime it falls, it finds its way back to resistance. So gold is still looking like falling. So don't be caught in a buy. Already, I think to some extent, it caught me in a buy yesterday, and I just had to hold on to it because eventually it's still going to come back. So that's the essence of you not exposing your account to too much risk by using the lot size that your account capital can carry, right? So that's my expectation of gold. A fall before the rise. A fall before the rise. So it has created 1, 2, 3, which is at the resistance. So let there be a fall, and after the fall, price can now find its way back again to the resistance, right? So last instrument, which is going to be oil, 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 oil. Oil is such an interesting instrument that the fundamentals of the Middle East. I think we need to now check what is happening in the Middle East as it comes to news, commodities. That's what I need. Right? Asian stocks, UK economy, Trump hold, gold price, Credit Suisse, real estate, rural staff growth of zero, Japan economy rebound, Oil prices up on hopes of US rate cuts, still for demand. Israel's Now, something happened, I think, day before yesterday or Monday. And what happened was that I think Iran sent a rocket, a missile, rather, a missile to Israel. And that's what makes the price of oil to actually skyrocket. That's on Monday, thereabouts. Yeah, that's what makes it to skyrocket. And if you check, it was just going up, from 79, it entered 82, which sometimes it doesn't really do, right? It entered 82. Let me clear all this so that we can do our top-down analysis. So this is monthly time frame for oil, monthly time frame for oil, and the first thing I can see on oil is all these things. First thing I can see on oil is the low, 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 lows. We are doing a top-down analysis, don't forget. Right, so since it's lows, that's starting with, let me zoom in a bit so that I can locate the highest point and the lowest point. Highest point ever. If I talk about highest point ever, this is not the highest point ever. The highest point ever is here. So, but the one I can see on my chart, after zooming in like this now, this is the highest point, and the lowest point is here. Lowest point is here. Can you see? Now, if I'm to divide this to 2, perfect. Right? So, dividing it into 2, you see, every instrument, don't forget, they all have a price target. So, my job responsibility, my assignment in the market is to find the expectation price, expectation of price. So, basically, with what is happening on oil, we are doing more of technicals, right? But please always look out for fundamental events. Yesterday, the crude oil inventory came out hard, 1.4 million barrels of crude oil in the inventory for the US dollar. And that's why you see there's a bit of a fall. The news was released around 345 yesterday. So that's why you see that there's a bit of a fall, price fell, and now it's trying to find its way up. So for me to be trading oil, let me go back to my, right? If I'm going to be trading oil, I'll do more of pending orders because of the tension in the Middle East. So I don't want to give chances to anything. I don't want to give chances to anything. So do more of pending order on oil. So if you are doing pending order, just ensure to locate your resistance and your support. Because for oil, there are times it looks as if you do not respect it, but the guy will respect it. This was a previous resistance, but let me divide this into 2 also, basically. Because if you notice, it's looking like price is being closed in a box. Looking like price is being closed in a box. A box. So it's looking like every instrument are even being closed in a box. Now, the same thing with USD that we checked. Same thing with USD but this on a 1 hour time frame. So if I go to 4 hours, it's looking like it, right? So same thing on gold. Same thing on gold. Looking like it's being closed in a box. Go to D1. Everything is looking like they're being closed in a box. And now oil, almost the same thing. Looking at the highest, the lowest. So it's dancing in between. So this guy will pull up, right? But if it's pulling up, I'm expecting a lower low, but a lower high that's lower than the previous high. So somewhere around here is an expectation where it should get So if it's going to get there, let me change this to Aqua. Somebody say, with all this analysis and with everything, so is it still possible that price will not go in your direction? Very, very possible. Imagine Israel retaliates with a missile to Iran. Do you think oil price is not going to jump up? True, because the jump up and immediately after that, you see price coming back down. So you want to give chances, all right? So you can see weekly time frame. This is even perfect. You see the way price has just been ranging up, down, up, down, up, down. Then expect it to come up. Expect it to come up. And I've segmented, I've been able to define the highest point, midpoint, lowest point. See. Now, let's go back. Let's check more of pending order. So if you are doing a pending order on your 1 hour time frame, to be precise now, you are doing pending order on 1 hour time frame, just go below the lowest point, then go above your moving average, which is serving as resistance, go above it, in between the price levels, then you just take your profit and you are out. Take your profit, you are out. See, that's the best thing you can do on oil. All right, that's the best thing you can do on oil. I think somebody mentioned Euro card or USD card, Euro card or USD card. So, let's see if I can see add that. Though my time is fast spent already, but okay, NCD USD. Let me just see that card. So this is Euro card chart, and monthly time frame. Euro card. So this is Euro card. Now, obviously, this is the highest point. Check this mark. Okay. And is this the lowest? No. This is the lowest point. Divide into 2. We have, after dividing it into 2, it's looking like the support for price currently. So expectation for Euro card, expect you to pull up, let it pull up, let it pull up, let it pull up. Now, as much as there are some struggles here, which price is respecting, but next candle, take it higher. Next candle, take it higher. All right. So for Euro card, basically, I think also you can look out to do more of pending order. Just look at strategic points, support and resistance. Price has curved. So this is like a chart pattern. And I think we should find one. If you are attending training, please ensure to attend technical analysis class so that they can teach you chart pattern, right? So that you understand how to use chart pattern trade, right? How can you trade AUD outcome? AUD outcome, how can you trade it? That means there was a fundamental event or there's a fundamental event coming out. You have a speech coming out tomorrow by 12:30 a.m. by Bullock. That's the governor of the Reserve Bank of Australia. So, okay. So I think what you do is pending order, except you want to go and listen to the speech so that you understand what Bullock is saying, right? So the person that wants to trade Euro card, please set your pending orders above the highest point and below the lowest point so that you're able to take advantage of it, right? So this is 9:02. Now, with all the things we have discussed, I think this is a practical analysis, a live chart analysis that we just did this morning. So you have a trade on USD card. You have a trade on USD card. let's wrap up right now. So I have limited time. We didn't start late, so that means you have a buy trade on USD card. For you to say you have a trade on USD card, that means you have a buy trade and price has been falling, right? So let's check monthly time frame, top analysis, time frame. So from all indication, it's still looking like it's just the moving average stopping price currently. From all indications, there's still tendency price might drop a bit, but in dropping, now still expect price to find its way back to the resistance. Because this resistance is looking more valid. It's looking more valid for price. And since it's looking more valid for price, we're going to be doing something like this. So it's looking more valid for price. So I don't want you to take chances, but then price will still drop. And if price is dropping, look at this here. I'll just adjust this. And if price is dropping, to drop a bit, obviously, right? And after dropping a bit, expect it to come back to the resistance. So if you have enough money, you don't need to be afraid. Leave it and just look for where to put your stop loss so that it can just take you out in case it's not going in your direction, right? Thank you all for joining Morning Market Review this morning, right? So you will be seeing us tomorrow. Don't forget our classes that is still holding. Now, there'll be a class this evening by 6 p.m. You can join the class. You learned a new thing today. Wow, that's good. There is no training you will come or you will attend rather that you will not learn one or two things, all right? So please just do well to practice, do well to be disciplined, and do well not to expose your account to too much risk. Thank you.